Should you postpone retirement to get a higher high 3? How much more do you really get for a $5,000 increase in high 3? That's coming up next. Hey, my name is Mel Stubbs. I am here on behalf of Retirement Benefits Institute, talking to federal employees about their retirement and how to plan better for retirement. Please like and subscribe if you like this type of information and you want to get more of it. And do us a favor and share it on social media. Just if you got some friends that want this type of stuff, please share it with them. We get this question a lot, and so I wanted to make a video about it. It comes in the form of, should I move to another city that has a higher locality pay in order to get a high 3 when I'm getting close to retirement? Or, I just got a raise, I just got a step increase. Should I work one more year to get a higher high 3? And so I wanted to make a video to go over the details, the math, so you can see if it's worth it for you. So just to remind you, how is the calculation made? If you'll see here, it is your high 3, that is your 3 consecutive highest 3 years of earnings. It could be anywhere in your career. Most of the time it is the last 3 years of someone's career, but it could be any time. So it's the highest 36 consecutive months times 1% times the number of years. And for our explanation today, we're trying to narrow in on just what does the high 3 do. So in this calculation, we're only going to use 1%. So if you are special provisions, this won't apply to you. You've got a different percentage. If you're CSRS, that's different. This will be FERS, 1%. Also, if you are 62 and over and have 20 years of service, you'll actually be getting 1.1%. You'll be getting the enhanced annuity. We're not going to talk about that today. This is just high 3 times 1% for regular FERS employees that aren't getting the enhanced annuity. And then we're going to use 30 years in this example. So if you'll look here, we're going to use $100,000 high 3, trying to make the math easy, times 1% times 30 years. And you'll see here that that pension amount would come up to $30,000 a year. So let's say you get a $5,000 raise and you work one more year. So that means if you look back at the last 3 years, you'll have $100,000 a year, $100,000 a year, and $105,000 a year. When you do the average, you can see there the high 3 is going to be $101,667. So then when you do the math, the pension per year is going to be $30,500. So it's going to be a $500 a year difference because you worked one more year and got $5,000 more. Well, what if you get $5,000 more for 2 of the 3 years? So the first year is $100,000, then you got second year $105,000, third year $105,000. This averages out to $103,333 as a high 3 times the 1% multiplied by 30 years comes up with a $31,000 a year pension. Also, one more year of $5,000 gives you $500 more a year of pension. So let's say you've got the extra $5,000 for all 3. So now you've got 3 years in a row at $105,000. That would give you a high 3 average of $105,000 times 1% times the 30 years gives you a yearly pension of $31,500. So if you want to narrow it down to just what does $5,000 of high 3 make a difference, you can see here $5,000 times 1% times 30 years is $1,500. So there is a $1,500 a year difference if you get a $5,000 raise in high 3 if you're doing 30 years of service. Now the more years of service you have, the more credit you'll get for the increased high 3. So this is using 30 years. But to answer the questions, how much do you really get extra if you get a $5,000 higher high 3? In this example, the answer is $1,500 a year. Now the better question may be, how much is enough to retire successfully? Once you have enough, then you have enough. So instead of how much does one more year get me, let's figure out how much is enough for you. So you're going to want to work with somebody that understands your benefits and can help you come up with these numbers. You need to know what your pension amount is going to be. You need it to be after taxes, after health care, after survivor benefit. Are you getting the supplement? Or are you getting Social Security? You need to factor that in. What assets do you have? What is the safe withdrawal rate? How much can you withdraw that you're not going to run out so you can put that towards your income? But you need to come up with what is your total kind of income, and then what expenses do you have? Putting all this together helps you determine how much is enough for you. And everybody has a number that shows this is enough. At Retirement Benefits Institute, they have these rocks. I don't know if you can see on there, but it has the word enough on it. Retirement Benefits Institute and enough. And it's actually not a rock. It's a squishy little thing here. But these are things that we can give to people once they have achieved enough. I'm reminded of a great conversation I had with someone where we were going through their numbers. She had more than enough, like more than enough. And so going through the numbers, I was able to tell her, you know, you're still wanting to work because you want to, and you're contributing the maximum to TSP. And you know, you should probably contribute the 5% to make sure you get the match. But all this extra you're contributing, you don't have to anymore because you have enough. If there are things that you want to spend now and just not save, like, you don't have to save anymore. You have enough. And I can remember with a total straight face, she told me, that is the nicest thing that anybody has ever told me. And I got to thinking, how many people don't realize where enough is and whether they've achieved it or not? Our culture tells us that more is better. Just a little bit more and that'll be enough. But the truth is everybody has a certain number that is enough for them. And once you have that number, you can retire with confidence. If you need help gaining this type of clarity on your retirement numbers, reach out to Retirement Benefits Institute at retireinstitute.com or call them at the number on your screen. They can help you figure out what your numbers will be, to help you find out what your pension is, what Social Security is, what your TSP balance could be at retirement. Reach out, get the help that you need, and until next time, my name is Mel Stubbs.